Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox News, Fox Business, the New York Post, with my partner in crime, the granddaddy of data, the one and only Bob Sloan, the founder, the CEO of S3 Partners, the number one independent data provider on the Bloomberg network, and a lot more than that. He's also a really smart dude. He's traded through a lot of these markets. He's here to impart his wisdom, to keep me in check, to make sure we don't get sued. No, you're here for much more than that, Puff. But
Listen, Charlie, I'm your compliance department. It's okay. It's good.
thank you. Someone got to do it. Might as well be you. And he's also here to help you all, our viewers, trade through these crazy markets. Bob doesn't give advice. What Bob does is provide data, and we unpack that data. I help him do so, and in helping him unpack that data, which only S3 can provide, you can make better decisions about where to put your money. And that's where I want to start off right up top, Bob, because this has been a big week for trading. Obviously, you have SpaceX IPO last Friday. It was a sort of an event that I haven't seen in a long time. It took sort of the big IPOs of yesteryears. I guess you can name them like Facebook or I don't know, Twitter or whatever. It took it to a parabolic level. This was the biggest ever, right? It valued SpaceX at $2 trillion. Now they're over. Last I checked, it was like 2.5 trillion.
Yeah, stock's up 30%, and
Stocks
even
up
though
30. Go
even
ahead.
though it's down today,
Was it down today again?
it's down now. Yeah, I mean,
It was down yesterday, and
last
then
time I
it's
checked.
down. That's interesting. That's 2 days. Maybe maybe the little gloss is coming off the thing a little bit. This shiny new object is people are starting to look and see the cracks. Bob, I read the S3, right? Or not the S3, the what they call the prospectus, the S1.
The S1.
Yeah. Okay. Can't not to be confused with S3 Partners. The S1. I read that, and as I'm reading this thing, aside from the fact that it obviously lost money in the last year because it was doing its AI build out. This is kind of a crazy company. On one hand, they put rockets in, they have aspirations to go to Mars, or as Ralph Cramden would say, to the moon, Alice, right? Which was always meant like crazy town. They do satellites. They have that Starlink company that's folded in there. They have some AI component, which they're competing against Anthropic and the others, right? X is in there too.
Yep.
I mean, this is kind of like a weird tech conglomerate, isn't it? And conglomerates have like a really mixed record of delivering. Like at some point they got to deliver returns for shareholders, other than this sort of exuberance of the IPO and what might be. How do you look at this? How do you look at it short term? Because I think that's what our viewers would want. Should they be buying this? Should they be waiting? Should they buy on the dip here? Is this? And what do you think about it long term?
Well, here's the thing that I think that's important about what SpaceX represents. The question is, does it also include in the future other Elon companies? Does the Boring Company, does Tesla, is this a way to actually fund everything else too? So they're in the market for
Tesla
that
get
raise.
folded in. You think that's a possibility?
Maybe. It's certainly not an impossibility. Let's put
Right.
it that way. It's something to think about. So I just think it's a cultural moment because it's a faith in capitalism. It's a faith in the future of mankind. They want to drill for rare earth on the moon. They want to put hotels on the moon. They want to go to Mars. They want to put data centers in space.
That reminds me of that old saying.
But that type of thinking is harkens back, and the reason why it's such a lightning rod, right? And you say, like, why is retail so over this stock? Why are they so emotional about it? Because it goes back to the very antecedents of the country. If you look at what was on the Mayflower and you look what was there, the perception is you were Mayflower and you're a descendant of Mayflower, you're aristocracy. But if you look at the actual people that were on the boat, they were either missionaries or marauders.
Absolutely.
And that's exactly what we have today. And I don't want to say Elon Musk is a marauder, meaning, they were capitalists, right? And
They were rolling the dice. Look at the
They were
people
rolling the dice.
the people that went out west to
Right.
fulfill a manifest destiny, as they once called it. Although I will say this, there was a great scene in The Sopranos. Remember, I'm a student of The Sopranos. A lot of wisdom from people like Paulie Walnuts and Junior Soprano. And so someone said something to Junior Soprano like, "Oh, we want to do this, that, and the other thing." And he looked at him and says, "Yeah, and I want to fuck Angie Dickinson." So, which means he's never going to fuck Angie Dickinson, who, by the way, back in the day was this beautiful woman back in the 70s.
But what does that mean?
It means we all want to do these things, but can we? I mean, is it feasible?
But that's not the point. I think you're missing, Charlie. You're missing the point. I'm not saying it's succinct enough. So, going to Mars, data centers in space, that is a purely American thing. You don't see European companies doing this. You don't see Asian companies doing this. You see them trying to actually do things.
You see the Chinese trying to steal our technology.
But this is the point, right? We create. It's endemic to who we are as a people, right? On the other side, you got the missionaries, confiscate wealth, puritanical in a way, right? I would say economically puritanical. Confiscate wealth, tax it. No one deserves to be a billionaire. There's no such thing. It's not possible. You get this imbecilic rhetoric that is anti the actual mission of SpaceX, which is to do the impossible. We're in the business of doing the impossible. That is why it has captured capital markets. Now, is that a business plan? Maybe. Is that a cash flow? Maybe. Is that adoption? Maybe. Is there a $28.3 trillion TAM, total addressable market? Maybe. But the real question for you in the S1 is, when does this company start making money and doesn't have to rely on either an initial public offering or more debt offerings? So between the debt and equity, they've raised almost $100 billion. When that number gets to be zero, that is when this company could be a $15 trillion company. That's the real question for every investor. When do these companies get to zero? Meaning, when are they using their own cash flow to finance themselves? That's the biggest number in business. And that's what's at stake.
It's impossible.
That's what everybody should be asking themselves.
But it's impossible from reading that S1. You have to believe in it, in that his pie in the sky is reality.
I don't know. I wouldn't bet against them.
Listen, smarter people than me bet against them and lost. I mean,
big time, and it's still fighting it, which is, incredible to me, right? There's this New York Times article that talked about the IPO, and that the same people that were incredulous about Tesla and said, the company spent $15 billion to get to a $40 billion market cap, then spent very little, if not zero, going from a $40 billion market cap to $1 trillion plus.
Right.
And that's what they missed. It's like they didn't need to spend money. That's why getting to zero was such a big thing for Tesla. So, do I think that this thing is overdone? Yeah, I probably do. But by the way, that's not what we're in the business to do. We're not an investment advisor, the data. But if you're looking at something and saying, wow, this is a $1 trillion plus bet on someone's imagination, should you buy this? The answer is you probably should have been able to buy it maybe like a year ago when it was private. Then it was probably a good piece of paper.
Right. We should point out that the history of these great companies have been erratic. I mean, Facebook faced its demons.
Well, look at Amazon. Amazon didn't make money for 19 years.
I remember covering Amazon when it was a near penny stock. It was trading at like $8 a share. Right? Remember the technical violation? The technical definition of a penny stock is a $5 handle. Not necessarily trading on the OTCs, but it was trading around $8 after the dot-com bubble burst, and it came back. and it's a great stock to own. The question is when you buy it. And I think you're right. I think opening up the private markets, which I know there's a movement afoot in Washington to do so, that's probably a good thing.
Yep.
Becoming an early stage investor. And even if you're not an early stage investor, listen, you're going to be exposed to this in certain ways. Remember, you're going to be exposed to this through indexes if you own the Nasdaq, or if the S&P is not letting them in right off the bat, so you won't you kind of you will have dodged the decline, because there's going to be it's going to drop off. It has to.
Well, we got an interesting comment from someone that has about 46,000 followers.
What's his name?
Hero Web3, 46,000 followers, and she's like, he or she. That's not really queer. Well, it's this girl, so girl, she says, this is a buying opportunity. Buy the dip. You might be right, but I'm just saying, wow, you really have to. You're going to have to be prepared for some volatility. That's all I'm saying. This is going to be a big ride,
and we should point out
have to be prepared for that.
People piss on the short sellers on Tesla. They actually performed a vital service. Elon admitted that Tesla was almost in bankruptcy at one point. I mean, they had production issues. They had all these issues. He basically worked night and day to pull that place out of the gutter, when the short sellers were saying, "Hey, these numbers aren't working out here."
That's why I said zero is the biggest number.
Yeah, so
that's what that's what they missed.
But the sort of naysayers, like the Jim Chanoses, were balance sheet right on this. Jim Chanos has a lot to say on Tesla. We should on SpaceX. We should probably get him on to explain it, because he did. Jim's really good at reading balance sheets, and he kind of pulled that thing apart.
But I get it, but ultimately, look, we all have a lot of respect for Jim. The guy does something that's probably the hardest thing to do, which is to and did it for a very, 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 very long time. Okay. There is nothing like running a short only fund. It's not fun, because you get to be right twice, like in a year, and the rest of the time you're getting smacked around. Like you're looking at a tape that's hurting you, right? So
in this market,
it's
right?
emotionally, exactly right. The markets have an upward bias until they don't. All I'm saying is that maybe it's just time to kind of like go, hey, the forces here are greater than my opinion. It's just one of those things. And you know what? We keep saying over 25-year period of time, WorldCom and Enron. What else do you got? I mean, shorting is just so different right now. Things like Avis actually take very famous people with a really great track record. It puts them out of business. So
AMC, look at AMC. Look at all those.
You have to be. Things change.
Look at all those meme stocks. How long it took, like, those things to settle out.
So that's the thing around producing a return in this type of market, when you have to be short. Like this is why people pay the fees to hedge funds, because they can short stocks. Well, that's the difference between that and mutual fund.
What is the S3 data saying on SpaceX? Is it easier to borrow? Is it hard to borrow?
It's easy to borrow. It's like, I don't think the short interest is very light. I would put it. We're still estimating, because we're obviously still collecting data. The data is so volatile in the first 3 or 4 weeks, especially the biggest IPO ever. Don't look at the borrow data, because a lot of that is pre-positioning. There's a lot of different things going on, the mechanics of how that particular, and it is a market, OTC market, works. We would probably say there's probably 10 million shares short, maybe.
Interesting.
This is not a lot.
That's nothing, right? I mean, how many?
No, that's what I mean. It's not a lot. Not a lot.
All right. Well, we don't got a lot of short sellers willing to take a bet against this thing. Although,
and by the way, neither should they. They shouldn't. It's not a responsible thing to do with something that is pure emotion.
Although you don't know how the options guys are playing it. Are they playing it
It's purely, to me, it's just pure emotion.
Yeah.
Pure emotion. You can make all the logical, you can look at the S1, you can do all the things you're doing, you can report it the way you're doing it. That's not really what this stock is about at this point in time. It's a referendum of how the country feels about itself.
Although I just saw something, Bob, you'll be interested in this from Ray Dalio. Just
I
talking.
mean, he's been bearish on everything. At some point, you're going
I
to be
mean,
right.
I thought they were, look, listen, we have an Iran deal, right? Or kind of a memorandum of understanding, which the markets kind of like. Oil prices are coming down. By the way, I'm here down south, Bob, and I saw $3.50 in that range for gas. That's not horrible. I mean, we're way
By the way,
over.
where you are, they have the greatest name for a gas station.
What?
You ever see the El Cheapo?
El Cheapo.
El Cheapo is my favorite gas station name of all time.
This is just like a regular gas station I just popped into, and it cost me. I'm in South Carolina, by the way, so you know what state. It doesn't have crazy state income taxes, but it's or sales taxes. But then I'm reading this thing from Ray Dalio, like saying, we're at this inflection point. I don't want to misquote him. That it kind of disappeared from my timeline, but it definitely was a bearish call that, like, we're at some precipice of disaster. It seemed like reading that.
Look, his views have been, he's been very much out there saying this is a moment for Western civilization. He sees us as cratering. He sees us as having intractable problems. He sees us, deficit spending running away. He sees a debasement of the currency. He sees a rise of another hegemon, China, and he sees that as existential for Pax Americana. That's his view.
God, you could poke holes through every one of those. I'm not saying he's wrong. China steals their stuff from us. China's got a demographic problem. China's got a lot of problems. Who knows if they're doing anything? I mean, you can't trust any of the numbers coming out of China. I mean, Elon Musk is talking about colonizing Mars. It's an American citizen. It's an American business. I mean,
Charlie,
and price of oil is coming down. It's not going up.
This is right. This is the point, though. Aspirationally, SpaceX is the encapsulation of all of our sci-fi wildest fantasies and making it a reality. Think about all the movies and TV shows and everything that we have seen that is part of American culture, right? Other cultures do not make movies about outer space. They don't. We do. And so this is why it's so hard, I think, to bet against what he's doing, because it's so big and ambitious. It will attract other things to it that we just haven't thought about as being possible. And that is what you're betting on.
And we're coming up on 250 years, right, of this great country. I wrote a column about it. The Post is going to have a huge special insert in the paper, and I wrote a column about capitalism. And our type of capitalism has done really well over 250 years. People make it sound like the pockets of discontent. Obviously, we both hate the fact that some screwball named Zohran Mamdani is the mayor of New York City, right? Or Karen Bass could be the mayor again of LA. But that those are specific areas of the country. They don't represent the entire country. And as a matter of fact, I would say they represent small pockets of this country, which the way the founders sort of created things is like, well, if you want to elect a lunatic, elect a lunatic, and you pay your prices, you pay the consequences. But the guy in South Carolina or Iowa, or you out in the Hamptons, doesn't have to deal with it because you elect a non-lunatic.
That's right.
And I mean, that's what's great about this country is in much better shape than you think. And if you read social media, you think we're like like Trump is just falling apart every day. And, the hysterical comments that I see about him just doesn't reflect what I see on the outside. Even if you go to a liberal bastion like the Upper East Side of New York, if you have dinner at one of our favorite places, Ilio's, you will see people in there who normally vote Democrat saying, this Donald Trump did something that others wouldn't do. He did get a handle on immigration, which was insanely out of control. You can't have open borders in a welfare state. He did, as imperfect as the memorandum of understanding what Iran is, he did take on the mullahs and put them back, decades. If they abide by everything that they said they will, I mean, who cares? You know what I'm saying? They're a paper tiger now. They weren't like that before. I mean, this guy.
Well, I hope you're right
with the country, and
I hope you're right. I hope you're right.
I hope I'm
Well,
right.
I hope you're right.
But you don't think I am?
It's a tough one. I think it's too early to tell. We don't really know what the damage is. We clearly didn't know what the fallout would be from actually eliminating the one layer of government, only to have it be replaced by this factionalism that's obviously going on within Iran. So there are a lot of things there that we could not have anticipated. I don't think anybody could have war gamed it out. But there's
There's
certain
no
things
supreme. There's really no supreme leader, right? The Ayatollah, the next one, he's probably half dead, right, on a ventilator.
I have no idea. I have no idea. I'm not qualified to.
Well, I mean,
and neither one of us is qualified to give it. We can give an opinion, but it's not based.
Common sense. He would have shown his face, like they would have wheeled him out at least, like a little bit of a weekend at Bernie's thing. If he was,
we'll see. Look, you know what? I mean, here's the thing with the situation there. Clearly, they know that we can take things out pretty much at will. Any life lost is terrible, but in military terms, at a low cost.
True.
Right? So high, maybe high cost financially, but you go to combat, you're going to make casualty estimates. You're going to figure out, is it worth doing it? And as we said in the show many times, I'll spend the treasure rather than spend blood. Right. So that's our stand. And that's why I like the move in terms of the blockade, because it was a very, very, very low, high risk, but you weren't boots on the ground. Right. And there's clearly no tolerance for that. So the thing is, did we prevent another North Korea? Did we prevent them from being like North Korea? Or are we sliding towards where they are like North Korea, where they have these nukes and they keep getting better and better and better and more precise? With $300 billion, I don't know how many times we have to give them money and then they'd be surprised that, 10 years later, there are a lot of attacks and a lot of things we don't like. So, who's paying that $300 billion? How does it make sure it doesn't get into bad hands, et cetera? Time will tell.
Yeah, we have to really see the fine print in this deal. There's too much back and forth. I mean, I keep reading conflicting stuff. We're not putting money into the 300 billion. Somebody else might, or maybe they won't. This thing gets signed, I believe, tomorrow, right? Is there some ceremony or something?
Well, digitally, it's already been signed, right? Or maybe it hasn't, or it hasn't.
Memorandum of understanding. Remember it sounds like a bond deal. The memorandum.
Well, but that is right. I mean, that's the point, right? A memorandum of understanding is a financial term.
Yeah,
I don't know if that's in the diplomacy 101 at some,
you think the Ayatollahs know what that means?
Well, maybe because they seem to have a lot of money, so they probably do.
Mullah understanding, memorandum of understanding. Let's get to some.
The mullah's got a lot of mullah. That's that's the whole. They do.
They do at that. The people don't, unfortunately, which is not a laughing matter. No. Bob, let's get to some of your calls. We have like 15 minutes left, and you keep the lights on here, with your data. So let's hear what do you got for our viewers.
Let's pull it up. I think our first we didn't have a pick last week. Our pick is paychecks. We're bullish. I think earnings come out on Thursday, next Wednesday. So we got a bullish pick there on paychecks. So let's go to the hedge fund. Let's go to the hedge fund positioning. What you're seeing here is we show you hedge fund longs and shorts by sector.
Oh, interesting.
And so what we have found is that when you're looking at positioning, and we spent the first part of the show talking about an S1 and talking about fundamentals and talking about this is how you're supposed to analyze a stock. The seventh category of market data needs 6, right? You start out your day, you have earnings, you have price, you have interest rates, you have option activity. When you go to, let's say, Yahoo Finance, or you go to Google, you go to your Bloomberg terminal, you buy a package that gives you a starter set. And it's got 6 categories in it. It needs 7. And we are the 7th. S3 is the 7th category of market data. And when you look at things,
circle of hell, as Dante.
It's not a circle of hell. Well, let's put it this way: it is a circle of hell if you do not have it.
Yes, true.
Okay, if you don't have this data, it is a circle of hell because you're not getting that. The flow is a fundamental in and of itself. Flow is risk. Position is risk. So when you look at the 2 biggest sectors, information technology, and you look at healthcare, and if you look at the hedge fund long positions, of all the long positions, 28% of hedge fund positioning is in information technology. Okay. The market cap weight of infotech is 32%. So they're underweight the index in their long positions. And then when you look at the short positions, they're at about 32%, which is at market weight. So what's this saying? It's saying that, we're underweight actually information technology. And the way we're hedging it, it's more or less at index levels. So my guess is you're going to see returns come out that as this stock rips because of SpaceX and everything else, the returns are not going to be great. They've missed out. So it's also telling you that they're unsure because they're underweight the index on the long side and they're at it hedging. So they're trying to make return by being, slightly negative on the whole sector. They think it's too much, too fast, but the market still keeps going up. So you look at something like healthcare, it's the most crowded space. And so this is not this is not like a miracle, right? This actually makes sense. If you look at any employment statistic over the last 6 months, where the jobs created the most?
Healthcare.
Okay. Exactly, right? So if you look at the amount of hedge fund long in the healthcare space on a percentage of float, so how much are hedge funds long the actual float? And the way we calculate it is the correct way. It's the most crowded trade there is. So in this day and age, what are the 2 things you really want to actually make sure you're doing as a manager to deploy capital safely? Is something crowded, and is there capacity? Those are warning signs. Healthcare is flashing red. It's a very crowded trade, and the capacity is becoming less and less. Now, this is data you will not get anywhere else. No one else can do this. This is why we are a market category unto ourselves. We've invented this way of looking at the marketplace. We have the data. We do it every single day. It tells you where the terrain is today. That's why it's so valuable.
So healthcare stocks, your data is flashing sell.
It's saying that it's very crowded. if there's something negative that comes out, you're going to have a lot of people rushing at the door at the same time. That's what you want
Yes.
to know.
Yes. Not necessarily sell, but be prepared for that.
Be prepared. Correct.
Hedge,
Correct.
or maybe sell.
Or maybe so. Or lighten up.
Like, no.
Since we do want to talk about Giuseppe and his private club, we want to get to that. And we want to get to the Fed too. We want to get to that. So I'm going to do one more, which is really interesting, that in the space sector, if we look at what's going on in that sector, you'll see like Virgin Atlantic and some of these other stocks where the Z-score, we love talking about Z-scores in the show.
Explain that one more time, Bob. The Z-score.
Sure. So if I look at a data set, and I look back over the last year, how much more is it comparing the short interest to its own history?
Okay.
Is it 1 times its history, 1.5 times its history, 2 times? So it's telling you conviction, magnitude of bet. It's also telling you when those scores are negative, right at the bottom there, and in the bottom of the top of the chart. That's telling you that the marketplace is saying, no, actually, we're not shorting these at all. It's like we're not as short as we were. We're actually unloading. We're actually covering. So people are starting to get who are the winners and losers in the space and in the space sector in the wake of SpaceX. Interesting, though, the thematic ETFs, like almost no activity at all.
Really?
So this is
Why is that?
well, because people are starting to say the stock selection matters.
Yeah.
And they're using this sector to say, you know what? We're going to make targeted bets.
Interesting.
Yeah. That's pretty much what we got this week. Those 3 things.
How do I play that later on? I mean, the last point you made.
I think you start looking at the performance of the companies. And what the market is basically saying is, here are the winners and here are the losers. So they think Virgin Galactic is just a loser.
Right.
And you can see, the stock price is coming down. You see, short interest, going up. People are playing this on the short side.
Okay. Interesting. All right, let's pivot to the Fed, Bob, and some of my headlines, which are not as riveting as your actionable calls and your S3 data, but I'm going to try to live up to what you just threw out there, which is amazing stuff, by the way. Especially that whole notion about just the way you lay out that short interest and what it tells you. Again, you don't get that anyplace else but here, and I tell people that all the time. They don't call him the granddaddy of data for nothing. At least I don't call him that for nothing. Okay. The Fed, Kevin Warsh, the Fed held interest rates stable. Everybody knew they were going to do that. He did not have the votes for a cut. It's kind of weird the way the financial press plays this as like a big thing. Like, okay, yeah. I mean, I wrote about this a month ago. He's not going to be able to cut. He doesn't have the votes. The fact that he didn't raise this time, I think, is telling. You know what I'm saying?
Also didn't have the votes, but
Didn't have the
maybe
votes.
preparing the marketplace for the possibility of doing that.
Yeah, and he will have the votes eventually, from maybe in September. But who knows? I mean, I could see him pushing that off. I could see him saying that, let's start to digest the lower oil prices. Let's see what happens here, because we're gonna get a lower inflation read once these again, gas prices come down, oil comes down, which it is. I mean, do you see the oil going to 60? I mean, that's kind of I don't know. I could see a $60 barrel oil, couldn't you? If this memorandum of understanding holds. I mean, that's
It could.
it could. I mean, that's a big
And that's the thing. It's got to hold for a little while, right? I mean,
Yeah.
it can't be like 3 days.
So keep an
But
eye
the
on
market likes to get ahead of itself, so maybe.
that. Yeah. Well, it's supposed to be predictive, not definitive, but predictive. That's one thing I've been tracking. The other thing I've been tracking is, New York City had some weird is experiencing some. It isn't weird in the sense that you couldn't see it coming because we have a dope as mayor spending stuff that he doesn't have. But they had some, the controller came out, Mark Levine, and said, and it was some really good reporting by NBC News affiliate in New York by Melissa Russo, where they were talking about like a cash imbalance. Like they were kind of running out of cash. Like, now this is not totally absurd if you know like how businesses operate. Any business doesn't have all its revenues all at once, right? It gets it
Sure.
throughout the year, and you often do short-term borrowing. So I raised the question, why didn't they do short-term borrowing to just like sort of paper over this? Because you anticipate revenue coming in the future, you issue a revenue anticipation notes.
Right.
And what I got back from some people that are very close to this situation is that they were afraid of the news story it would generate of much higher interest rates. So I went back and I started looking at the spreads. By the way, the New York City, the spreads on short-term New York City debt compared to comparable AAA paper since Bandami has been elected are up. The spread is widened like 90% or something. I mean, it's some astronomical. 90 probably isn't the right. It's widened significantly. Let's say.
Well, 20 bips and 30 bips in that market. So,
Yes.
2/10 of 1% is a big deal.
I mean, it's
in
widened
most
like
markets.
off the charts. Widened, maybe like 20%. I think was the number that's sticking in my head. I don't have my copy in front of me. Yields on regular 10-year bonds have widened like 13.7%. So what I'm saying is that New York, you can defy logic only so long. The market sniffs it out. And what Zoran Mondami is going to realize is that if this stuff doesn't work, if things go sideways in any way, if the markets take a dump and, there's some problem, he's up shit's creek without a paddle because the markets won't bail you out cheaply.
So you and the Post, who's his financial advisor? Who runs the economic policy for him? And who's actually talking to bond markets and saying, maybe our costs, I see our yields are widening out. Like there's no one out there.
Well,
When your controller and or your budgets are in Albany are saying, hey, we have to issue revenue and tax anticipation notes to fund ourselves.
Well, just so you know, the controller Mark Green came out. Oh, excuse me, not Mark Green. Mark Levine came
Mark
out.
Levine. Yeah.
Said we shouldn't do that. They were gonna stiff some nonprofit vendors.
Right.
They decided not to do that. They're kind of searching around for money. I mean, they'll figure out a gimmick to pay for it. The fact that they have to search for a gimmick is telling, in my view. It shows you that they don't know what they're doing. And we should point out the controller is not exactly an enemy of Mondami. He's he is the chief fiscal officer.
He endorsed him.
He endorsed him. He does the bond sales. We probably do along with people in the mayor's office. I don't think there are many fiscal types in the mayor's office. I don't think. I mean, I don't know one Wall Street person that's there. Usually, the mayor's
That's my
office
point.
has one. I mean, these are like commies that are, it's like apparatchiks that took Africana studies.
Hold on. I didn't really quite understand your last point. Can you make it a little clearer for me, please?
Okay, they're Marxists, not commies, but you get what I'm saying. These are not
I
like
do.
people that are adept at balancing their own checkbook, much less a $127 billion budget. So the controller's office does have some of those types of people. They know what's going on, but he's doing a balancing act because he's a Democrat. Does he want to blow this guy up like right off the bat? It'll be interesting to see how much he allows Mondami to get away with. I asked him for a comment, Levine, about this cash flow thing, that the cash balance being low, and maybe, well, people were talking that maybe it might be depleted by the end of the by March. He says, "Thanks for reaching out. Here's the controller made this comment recently, and this is what Mark Levine recently said." Let me just, it's my thing has to come up, my Twitter feed. It's an enormous relief that the promised advances for New York City nonprofits are no longer in jeopardy. So they're not going to withhold the money from the New York nonprofits as was kicked around. I'm also optimistic that we can manage our potential late fall cash crunch through means other than short-term borrowing. So he doesn't want to borrow. But let's not lose sight of what's happening here. And then he talks about how in recent years, we've had a structural imbalance, blah, 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 and it goes on and on.
Well, we got to get your friend Rich Farley back on the show. He rightly pointed out.
Well, I talked to him.
I know you did. That's why I mentioned it. I know you did.
Rich said, and Rich, as you know, is a bond lawyer. He wrote a book about the New York City financial crisis. He's a historian. And Rich basically said, listen, blaming it on Adams is ridiculous. I mean, this guy owns it now. He is very profligate. He has used a lot of one-shot revenue raisers to balance the current budget, including some sort of gimmick with the pension funds, like a sort of delay of paying it. And, you reap what you sow. So this is a situation you should keep an eye on. This is a little bit, it could be a canary in the coal mine here. If you just run out of cash, you don't want to borrow, you start stiffing vendors. It's always a bad, and you don't want to borrow because you got to pay up. See, if they borrowed in the short-term market, I would be doing a story now saying how much they paid up for this.
Right.
And we'd also call it a deficit borrowing, which is not quite. It's more of a cash flow borrowing. But
those rands and tans are what actually put New York amongst many other things on a road to bankruptcy.
Right. Because what they did was
that was the practice.
That's all they did. They didn't issue long-term debt. They literally just kept rolling over short-term debt, and there was kind of a market scare, which was true, that they didn't know. There was no records of how much money's coming in, how much money's going out. Harrison Golden was the controller back then, I believe, and he was one of the people that called attention to it. And then the banks got involved, and back then the banks would be like Chase and Manny, the big banks at the time, Chemical. They were the main buyers of the city's municipal debt, and they said nope, not doing it. And then that's when we were on the brink because we couldn't even finance ourselves. It was a pretty crazy time for talking about the 1970s. My father was a construction worker at the time, and I remember money from the city would often finance roads and bridges. My father didn't have any work. He was out of work a lot during that time. So keep an eye on that. Here's something new. Here's a couple of feel-good stories. My friend Anthony Pompliano of the Pomp podcast, great guy, financial guru, Anthony. He's investing in a guy's podcast who is a reformed addict, gambler, drug addict. His name is Louis Ruggiero. You probably don't know him. I know his mom. His mom is a dear friend of mine, Rosanna Scotto. And her son went through some really tough times. And he's come out the other end of it. And now he has a wellness sort of podcast that Anthony was riveted by when he first saw it. And he's financing it. They have plans to expand. I write about that in the Post today, and tomorrow you'll see it in the paper. And more power to Louis. I watched some of the podcasts. I saw the podcast with his father, Louis Sr., and it was riveting because it was so raw, and he really got into how he reached rock bottom, how it impacted the family. And he does it with celebrities that have also gone there. And he's told me he's got some big celebrity that he's going to roll out that was a drug addict that he's almost nailed. He asked me not to report it until it's a done deal, and I won't. But more power to Louis. Anthony's backing it up. Anthony's a smart businessman, great entrepreneur. We'll see what happens here. It's something to tune into if you know people that have been impacted by addiction. I do. And there's a way out. Louis tells you about a lot of it. The treatment is free. His podcast is free. Alcoholic Anonymous is free. Gamblers Anonymous. And by the way, he had them all. And it affects both poor people and rich. Louis grew up wealthy in New York. Famous parent, famous mother. Well-heeled father. So it doesn't discriminate. So that's something good to watch. And another feel-good story is our buddy Giuseppe Bruno, the owner of the great Sistina Caravaggio restaurants, and with his brother Cosimo and
Gerardo.
are good friends, both of them, great guys, run San Pietro. Giuseppe is going to turn Sistina into a high-end supper club, betting that Wall Street, like a lot of these Wall Street guys. I mean, I can't tell you how many times I've been offered to join these clubs, and I never do because I rather eat at Sistina if I'm going to spend a lot of money, or San Pietro, right? It was Caravaggio. But he's going to create, Sistina's going to have an aspect to it, which is a supper club. And by the way, it's a big building up in 81st, right off Madison, between Madison and 5th. I mean, he's got the room, and that's what he's going to do. And he's, this is his next step. And by the way, he's got an amazing wine list. It won't be cheap, as you know, because you and I have eaten there and it's paid the bill. It's not cheap, but
it's good.
It's good and it's worth it. And we'll see. I mean, listen, why do I cover this? Not because he's my friend, because Wall Street, this is the cafeteria of Wall Street, we should point out. I mean, who eats there?
Well,
we died.
You know what else too, Charlie? There's been such an explosion of private clubs in Manhattan.
That too. It's a story.
There's SVB, there's Maxime's, there's Chez Margaux, there's Zero Bond.
San Jacinti, this one, I went there.
SVB, right? So all that, people want privacy. They want a place to go where they know it's familiar. And so that's, I think, an interesting cultural trend in New York City too. That in the age of the internet and an age of social media and an age of everything is on camera, there's a need for a space where you're just not being watched all the time.
And that's the Bruno brothers, who came here with nothing from Southern Italy, where my family's from. They came here with nothing and they built this business, and they keep that privacy. It's not like, listen, yes, when Brad Pitt went in there last year with his very attractive girlfriend, there was a camera, I think, outside. So someone must have took him off. But he ate in relative privacy. Listen, I was in there once with Joe Biden, and Jill was sitting next to him. I've been in there with every Wall Street exec hanging out. You know what I'm saying? It's like your own private dining room, and it's very. And listen, I went to a party at San Vicente, and the food was good. Can't say I didn't like it. But Gerardo, Giuseppe, and Cosimo's food is like another step, and they're. And Nicolina is his daughter, who's going to be helping him with this. Nicolina, by the way, is not just his daughter. She's very smart young woman. She's got a PhD.
She's the real operator, right?
She gets the social media part, and she's also really sharp. I mean, she's a sharp businesswoman. So more power to him. I think it's it'll be interesting to see how it works. Again, he's got the clientele where. I think leading with the food, the privacy, and exclusivity, more so than, you're going to hang out in Zero Bond with a bunch of models. People get tired of that. People with money get tired of that. So he's banking on food selling as opposed to Z.
It will. We know it's good. All right. So what are our closing thoughts?
I miss you. I miss you. I haven't seen it a couple of weeks, but we should do dinner next week.
Next week, let's do that. Let's
Italian
back
restaurant.
to doing it in person.
Yes. Our other favorite Italian, Ilio's. I think we owe the dinner there, and I'm just watching SpaceX every day. Let's see if it defies rationality, or when it does.
Let's see.
I mean,
it's a long game.
You don't want it to, but
they've got $100 billion to spend. That's a lot of money.
Let's see what happens. All right, Bob, let's call it a day. Enjoy yourself. Get some more good data from S3 for next week, actionable and all. I'll try to break some more stories. This is Charlie Gasparino from Fox Business, Fox News, the New York Post, with my partner in crime, the granddaddy of data, Bob Sloan, signing off with another riveting edition of risk and return.